We know that 2% of funding goes to female entrepreneurs. And there's a persistent challenge in achieving gender parity, particularly for women leading on their own. I really believe that for systemic change, you need it to flow both up and down the value chain. So you need it to start at grassroots level with education, looking at STEM, having role models and mentoring, but you also need it to come up from, policy, from LPs, looking for more opportunities beyond the usual pool that they go to.
Welcome to the Future in Sound podcast. I'm your host, Jenn Wilson. This is a podcast where we discuss people, planet, and profit. In each episode, we'll learn from world-leading experts who can help us see the future we want and our role in it. This is episode 34, Putting Our Money Where Our Mouth Is. I'm delighted to have Nina Foote, partner and head of growth for Volution, on the Future in Sound today. Welcome, Nina.
Thank you, Jen. It's great to be here. I'm very excited for our conversation.
Me too. Why don't we start with a 30 to 60 second overview of who you are, your background, and how you came to Volution?
Sure, of course. So I'm partner and head of growth at Volution. Volution is a UK-based VC investor founded in 2020, investing in technology that redefines productivity, so specifically in capital markets and enterprise. So we're investing in fintech and SaaS businesses, transforming the way we work and how we shape the flow of money. Volution was founded in the wake of the pandemic, and we were determined to ride the momentum at the time to build back better. So we wanted to integrate ESG into our operations and our fund model. And it was just at this time that nascent organizations such as ESG VC and Venture ESG were coming about, bringing together a group of VCs who were interested in implementing sustainability, diversity, and inclusion within early stage companies. And we were very keen to be part of this. We're a small team at Volution, so my role encompasses all aspects of growth, from growing our business to growing our investor base and how we support our portfolio companies. And I'm also delighted to be working on the ESG initiatives for Volution. But my background is quite different. I come from the art world. I worked at Christie's for 13 years, initially working in specialist departments. I worked in Asian art and Impressionist model old masters. But then I moved increasingly towards business management, strategy, and innovation. So for the last few years, I was rolling out transformation projects and new technologies, managing change at scale within the organization. But I was very curious to try something a bit more entrepreneurial. And as a mother of 2 young children, I wanted to have more of an impact in the world. So that's what brought me here.
It's an amazing story, going from Christie's into venture capital. Often we hear about it going the other direction, starting in an investment and going into the arts, and entrepreneurial in multiple different sectors. So I'm really looking forward to picking up on one of the points that you just made around VC and ESG. When you first started at Volution, it was, pretty early stages in terms of, what do we do with ESG? What's most important? So where are we now in terms of the maturity of venture capital and ESG? And what do you see is coming around the corner?
I think VC has typically been a little bit behind the curve when it comes to our peers in banking, say, or private equity. But I think since 2020, really, there's been a massive uptake in the last 4 years, particularly in Europe. So as I say, the establishment of these groups like ESG VC and Venture ESG, it started with a very small group of investors who were interested in instilling these principles within the early stage business community. But I'd say now, it's not just the pioneers who are doing it. It's pretty widespread in Europe, which is fantastic. I went actually to a conference organized by Venture ESG the other day called Frame, and there were about 250 representatives from funds in the UK and across Europe who were all there because they were leading the ESG initiatives for their funds. And I thought that was quite a big moment, actually, because it shows what a priority at scale ESG has become within Europe. So, in Europe, obviously, there's a lot of will among investors, but there's also the regulatory push with the sustainable finance disclosure regulation and the new SCR regulation. I think ESG is really seen as a risk mitigator here and a driver of long-term value. I think it really can influence fundraising and valuations now, but it may be driven by LPs and regulators. But I think the sentiment in Europe is, employees and consumers really place a high value on ESG orientated companies. I think, we're still in the slightly early stages of integration, particularly when it comes to measurement and tracking, but there's a huge amount of progress that's been made. What's next? I hope to see a greater level of standardization of reporting and also focus on accountability. There was a panel I went to recently, and they were talking also about how VCs will start looking up the value chain. So VCs may well start asking their LPs, what are your ESG credentials, as well as it being the other way around. And I think that will be quite an interesting moment for VC.
Absolutely. And I'm really interested in this point about exit premia. Obviously, it's a bit of a dark art and the best of times in determining how much a company is worth. Have there been any examples that you've seen either at Volution or within your industry where it's a pretty clear case of the exit being improved based on sustainability performance?
I think it's a very interesting question. And, there are many studies that we see, whether it's McKinsey or Bain, who, show a very strong correlation between exit performance or financial performance and sustainability. I think if we could have very clear examples of this, I think it would make all of our jobs much easier. There is a challenge, but, there are companies that we see, Zopa is a great example of a company within our portfolio who is quite a mission-driven fintech company. And they've got this extraordinary initiative, which is the 2025 FinTech Pledge, which, this is not necessarily about sustainability, but about social good. And the aim of this initiative is to tackle the cost of living crisis by supporting consumer financial resilience. And they brought together many other fintechs in the industry and created a huge amount of impact. They've just actually published a report. So this, helps to raise their profile. It helps with engagement of employees. Zopa is consistently getting prizes for, how their employees feel, being one of the best workplaces to be. So I think there's a huge amount of value created there through impact initiatives.
It's so interesting because often with software, it's like they're really people businesses.
Yeah, absolutely. And the companies that we invest in, they are already thinking about, how they treat the employees, how they can engage, retain, hire the best talent. And, I think there is already a shift in understanding that actually to have a successful business, you have to have very engaged employees who really want to be there and believe in the mission and believe in the purpose of the business.
And in terms of the ESG landscape, maybe looking at differences between, the landscape for VCs in the US versus the EU, what are some of the differences you're seeing and how can we best navigate those differences?
Yeah, I think, as I was saying, in Europe, we've moved already from awareness to action. We've been implementing frameworks. In the US, I think there's a lot more variability and sadly an increasing sense of polarity. In the US, I think there was a leading VC in the room yesterday at the event who was saying that they have to slightly adjust what they say to investors in the US, depending on where they're coming from. They might actually, not talk quite as much about the good things that they're doing because it might be a bit of a turnoff if you're talking about ESG too much to US investors. But I think the way to navigate this is really to talk about what we can agree on and avoid acronyms with certain investors. So, if you're talking about good governance, if you're talking about fiduciary duty, reputation, stakeholder engagement, talent, transparency, all of these things are actually meaningful. And all investors, I think, can get on board with because you can see the value creation there. If you're talking about ESG, it can be a bit of a turnoff. But I actually think that this is a really, a better way, not just to talk to investors, but also to talk about ESG with startups. They may not think at an early stage that it's their duty or responsibility to make ESG a priority. They've got to be focused on getting to the next round, on achieving their objectives and KPIs. But when you talk about it in terms of building business that will be resilient, ahead of the curve, that will attract and retain talent, that will be ready for the questions of the next stage investors, I think we can all much more easily get on the same page.
It's a really interesting point. So a couple of things here. At Rico, we talk about being values agnostic. So as long as we're focusing on similar outcomes, we don't really care about the reasons or the motivations for taking those actions. So for example, if we're talking about decarbonizing assets and one stakeholder is interested in reducing carbon emissions and the other is interested in reducing costs, it doesn't really matter to us. We're still reducing the carbon emissions.
Yeah, yeah.
And it sounds like there's an element of that that's coming through in what you're sharing with us. And the other thing that I just wanted to say for listeners who are wondering, what event we're referring to, you're listening to the Future in Sound podcast, but Rico also has invite-only Future in Conversation events, which Nina attended with us last evening, which was focused on embedding sustainability. And we'll have many more in the future. So if you're interested in these events, please do reach out. Now, I'm wondering, look, we're talking about time-poor startups. How do you create momentum on sustainability when you have a startup come into your portfolio when they're so stretched?
Yeah. I think you're absolutely right. This is the greatest challenge for startups. They're time poor, they're resource poor, they're focused on getting their core KPIs and getting to the next round. So at Volution, we have, I think it's really a 5-stage approach. So firstly, we set the example. I think it's very difficult for an investor to speak to a portfolio company about setting an ESG agenda if they're not doing this themselves or they haven't been through the process. So number one, get your own house in order. And this is something that we tried to do at Volution. Secondly, explain the business case. Talk about the benefits for talent. All these things that we've just talked about, the next stage investors getting ahead of the curve, the studies. So, we provide the business case for them. Sharing resources is number 3. So we provide a hub which makes this information around ESG accessible, easy. It's shared resources, best practice. You can see what other companies are doing and how you can get on board. I think it makes it seem a lot more manageable when it's broken down like this. And actually, as part of that, we share a practical framework with the companies, which is, very much targeted at their stage and sector, which makes it very applicable for them. And this feeds into number 4, which is providing benchmarks by stage and sector. If the companies can really see how they're performing against their peers, I think that's very motivating, whether you're ahead or whether you need to catch up, or, it really puts it into perspective. And then finally, the 5th part is offering incentives. And I think that's something that we do a bit differently here at Volution with our ESG and carbon carry initiative.
Hey, it's Jenn. I just wanted to take a quick moment to let you know a bit about Rico and what we do. We're a tech-enabled advisory firm that helps private market investors and companies measure sustainability metrics using our software platform. We also help you to set targets and focus your efforts on sustainability areas that really matter for your business. And finally, we help clients to translate all of this work into your core value creation strategy or your business model. Check us out at re.co.com to get in touch. All right, now back to our conversation.
I want to get into this. So for folks that are listening, I find this initiative absolutely fascinating. Nina, tell us about how Volution puts money where your mouth is when it comes to sustainability.
Absolutely. So I think, as I said, having ESG fundamental as part of our fund model was really important for us. And we wanted to lead by example. And so what we've done is we incentivize our portfolio companies to drive ESG within their firms by offering them a share of carry in our fund if they hit certain ESG milestones. And beyond that, if they earn their ESG carry, as we call it, they will also earn carbon carry, which will be matched amount, which will go directly to carbon offsetting and removal initiatives. And the idea really is to, encourage them to drive ESG within their firms, to understand how important it is for us, how we can align our values and our ambitions. And also with the carbon carry, how, we can actually together make a positive impact on the environment. And I think the other important thing about this is we talk about the tech companies that we invest in. They're often already ahead, as we said, in terms of social initiatives. And as regulated companies, fintechs, they're also, focused on the governance side. But they're not always thinking about the environment. They don't think of themselves as the heroes or the villains of the environment as tech companies. But actually, you look at server usage, you look at the energy used by AI and machine learning, and actually it's a major factor. So by introducing the carbon carry here, we're also sort of putting a spotlight on the environment for tech companies.
For some listeners who are maybe coming from more of a corporate background, aren't as familiar with carry, what do we mean by carry?
So it's really a share of our profits in the fund. If the fund does well, if we perform, Volution will earn additional upside in the businesses. And it's that we share with our portfolio companies if they hit ESG goals that we've set for them.
Thank you.
And I was just going to add that, we are beginning to see results of these incentives. This year, we had 100% participation from our portfolio companies in the survey. And one thing that I find particularly rewarding is to see increasingly some of these companies integrating ESG within their board packs. It means that they are now beginning to speak at board level, discuss these topics at board level, and it is important for them. So that's fantastic.
And to just walk through an example. So imagine I'm, a new portfolio company, founder coming into the portfolio. How do you explain how this works to me? So what would that look like over the next year or two? What are the important targets for me to hit in order to make the most of this incentive program?
So we always start with an onboarding session where we explain not only our ESG model, but also our growth model, how we want to support the portfolio company overall. We also have Steve Lemon, who's a former founder of Currency Cloud, and he gives a lot of support to the portfolio companies from that perspective. And we explain how, we want to work very collaboratively. And then we bring in this piece around ESG and how fundamental it is to us and as part of our objectives, and how we really believe that building businesses with strong ESG foundations will create these strong, resilient businesses for the long term. It's all about value creation. And so we explain how it's done. So we are using a framework that exists already in the ecosystem, which is the ESG VC framework, which has been put together with the social value portal. And it encompasses 50 different questions across E, S, and G. And the idea is that they will fill this in on an annual basis. And we'll look at it as an annual basis. We'll use it for benchmarking, etc. And then there are certain milestones within that which they would have to meet to be able to earn the carry. So that's really how it works. And, there's a question and answer session, and we give them the small print as well.
That makes a lot of sense. So it's not just disclosing, it's also performance.
Exactly. Yes.
Yeah.
And what I love about the framework is it's, they fill it out and they might say that they don't have to have perfect scores to begin with. We have no expectation that they will, but the fact that they will iterate on this. And every year that they fill it in, they get the option to say, yes, we're doing this. This is, what we're doing. No, we're not doing this at all. Or the third option is, yes, we're going to do it in the next 12 months. And then it spits out an action plan for them at the end, which gives them that sort of 12-month progress report that we can keep them accountable to the next year.
And obviously, one of the parts of ESG on the social side is diversity. I wanted to ask you about the status of female founders. We've all read stats on how abysmally low the percentage of female founders are in terms of VC funding. You'll have the latest stats on this, I'm sure. But I'm interested, what's the status? Where are we right now with diversity in founders?
Yeah, I mean, it's not good, as you say, Jen. Female founders are significantly underrepresented and underfunded. So we know that 2% of funding goes to female entrepreneurs. And there's a persistent challenge in achieving gender parity, particularly for women leading on their own. I think what's missing actually is a lack of female representation in decision-making roles in venture capital. You need a lot more diversity in investment perspectives to eradicate any kind of unconscious bias that may exist there, and also just to kind of broaden the networks. If you have more women in investment teams, you're more likely to invest in women. I mean, there is clear evidence to suggest that. So, at Volution, we're part of EU Women in VC, which is an association which is focused on asset allocation for female co-led funds and female-led funds, and on building GP-LP relationships. I really believe that for systemic change, you need it to flow both up and down the value chain. So you need it to start at grassroots level with education, with, looking at STEM, having role models, mentoring, but you also need it to come up from, policy, from LPs, asking or looking for more opportunities beyond the usual pool that they go to. So yeah, I think it's a lot around role models, around transparency and awareness of unconscious bias, and seeking different investment strategies. But it is a challenge for us at Volution. Our portfolio, unfortunately, is 100% male-led in terms of the founder CEO. However, on the plus side, we do have an average of about a third of women in the management seats at these companies. So, there is some diversity there. But fintech and SaaS, they're typically very male-dominated. So, I think there's a lot around mentorship, policy support, and a cultural shift in investment strategies that we need to look for. But I think in the UK, there's a lot happening here. They just launched the Invest in Women Task Force, which its aim is to make the UK the best place in the world to be a female entrepreneur. And, it's founded on this belief or the fact that actually if women were to start businesses and to scale at the same rate as men, that it would give a 250 billion boost to the British economy. So, there are huge financial rewards all around if there are more female entrepreneurs and more founders who are able not just to start, but also to scale their businesses. And there are lots of other initiatives, like there's a Female Founders Rise, By Women Built. I'm quite optimistic. I think there are so many initiatives. There's so much desire for change, but it's not going to be easy. And, you look at the gender pay gap in companies, and it's still going to take another 50 years to get there. So we just got to keep pushing and keep providing the tools, incentives that are needed to make change here.
I mean, as a female founder, this sounds great. I've got to check out some of these initiatives. It's really interesting. I mean, we do have some corporate VC funding, but also private investors. And it is true that a lot of those investment decisions have been male-led. I guess where I have seen support underpinning your point about, unconscious bias is some of the clients who have really helped to build Rico have been not exclusively, but almost exclusively women and, people from diverse backgrounds. Mm-hmm. And so there is an element and we work in private equity. And we tend to work directly with core investment teams as well as sustainability teams. So we're, in core investment teams, it's a lower percentage of women on average. So I have seen firsthand that it makes a difference to have, diversity in order to draw diversity, if that makes sense.
Absolutely.
So we're coming up to time, and this is my favorite question. I love hearing from people on this podcast, how they stay up to date. So, what is it that you read, to stay up to date on these topics?
Well, as I've been saying a lot during this podcast, that, I've really found the networks, ESG, VC, venture ESG, phenomenally helpful. There's a lot of peer support, a lot of resources, a lot of research, and, their events and their calls are phenomenally helpful. So that's great. Events like yours, yeah, fantastic. Absolutely loved it. So yeah, and reading. And did you ask me the book question already? Was that?
Oh, let's get into the book question.
Okay.
I did give you a heads up on this. So tell me, what book has most shaped the way you think?
I really want to talk about the book that I read, the book that I'm reading, and my next book, if that's okay.
I actually love that framing. I might even steal it.
The book that I read when I started out Volution, thinking about our ESG, was The Future We Choose by Christiana Figueres and Tom Rivet-Carnett. And, that is a brilliant guide to surviving the climate crisis. These, of course, are the leaders of the negotiations for the Paris Agreement in 2015. And it's a great book on how we can confront the climate crisis head on with determination and optimism. What I like about it is it gives a very practical guide for, actions that you can take as individuals and collectively, which can help to shape the future that we want versus what might otherwise happen. I thought that was fantastic. I liked its optimism in the face of quite dire threats. The book that I'm reading at the moment is Grow the Pie by Alex Edmonds. I saw him at the Frame conference and I thought he was a fantastic speaker. And I think this book has been mentioned before on your podcast, but I really liked it because it very much resonated both with what we believe at Volution in terms of ESG and value creation. And I think also it feeds into Rico's philosophy of pursuing sustainability objectives and value creation together. So it's really about saying that profit versus purpose, that's a false dichotomy. And really, you can have social good and grow the pie, grow the profits at the same time. So I think, I haven't quite finished that book, but I'm really enjoying that. And the book I'm going to read next, of course, have to give it a plug, is this one, which I got from your event last night. So that's Embedding Sustainability, How to Drive Organizational Transformation. So I'm really excited about that. And if you'll indulge me, there's just one more, which is not really kind of on topic, but I think there's a lot when you're talking about ESG and driving change within companies. I think there's a lot that, the very popular books, James Clear's Atomic Habits, there's a lot that can do for businesses around small changes, delivering remarkable results, focusing on systems over goals, and making change obvious, attractive, easy, and satisfying. I think there's a lot when you're trying to integrate these new measures into businesses about making it easy, making it accessible, and of course, lastly, starting with the right mindset.
That was a fantastic overview. Thank you so much for joining us on the Future in Sound podcast.
Thank you, Jen. Great to be here.
The Future in Sound podcast is written and hosted by Jen Wilson and produced by Chris Attaway. This podcast is brought to you by Rico, a tech-powered advisory company helping private market investors pursue sustainability objectives and value creation in tandem. If you enjoyed this podcast, don't forget to tell a friend about it. And if you have a moment to rate us in your podcast app, we'd really appreciate it. Until next time, thanks for listening.